Okay, so this is a Rogue Trader system enhancement update. As I explained, this is still a very new system. As powerful as it is, I'm constantly looking for perfection, and that means looking at new things, back testing them, and so on, to give these ongoing enhancements, which is it's a dedication to myself and therefore to you with this system. So we're going to add just look at a few more things here that are going to amendments and enhancements that are going to improve performance even more. So the first thing is I want to show you an additional resource for getting earnings dates, and that is this first one we're looking at here, which is Zacks.com. Let's just try and find that page here. Okay, so I thought I had this open. I will get it open again for you now. Okay, so we go to Zacks.com, www.zacks.com. That's there it is, Zacks.com, and there it is. And we want to get there. We simply go to earnings calendar, and then you can just select the day in question, and you just click on earnings. If you wanted to look at the ones that are going to close, this market's closed now, but if I was going to say after earnings today, and then you click on that, and then you can scroll down, and you can show 25 or all of them, or whatever you want to do, or to go through each page at a time. And it says here, you can see all the codes, and then it's going to say before market open, after market close, AMC or BMO. That's just how that one works. If you want a different system, it's just a different way of looking at them. And if I was to look at tomorrow's, again, I'd say, so remember, if I was looking at today, it could be I'm looking at after market close. If I'm looking at tomorrow's, it'll be before market open. So I could go earnings, click on earnings for tomorrow, and then say before market open. So that's something I could have traded today, of course, because it's the same thing, after market today or before market tomorrow, before market opens on the next day. So that's Zacks. I wanted to show you that. There's a new filter. Sorry, this is it's not a new filter, it's an amendment. Let me just change that. This is actually just amendment to an existing one. And it's the one to do with the volume being 2 times the average. As you know, one of the requirements for a Rogue Trade is that we have twice the average volume in at least one of the last 5 days, which usually tends to be working out on the day in question that we're looking at trading. So I'm going to change that now to be a little bit more generous, and the volume requirement is now 1.8 times the average volume, not 2 times the average. So that gives you I found that putting that in there gives us a few more opportunities without sacrificing quality. So amendment to the filter there, it's 1.8 times the average, not 2 times. That's the next thing. Which, as you know, by the way, shows up on Yahoo Finance. On that, when you put in a ticker code, you enter that, and there you see the average, and there's today's. By the way, there was a Rogue Trade that came out just incidentally on Friday, and it opened up today. There it was on Friday. It was SILC. That was Friday's action. As you can see, the date there, 21st. And you can check this for yourself in your own time to see it met all the system requirements. And then that's how it opened up today. Gain of about 10%. So that was a good one. The option prices on that weren't too friendly, but you could have spread betted it if you preferred. Although I do prefer options with this system. But that just shows you, we can't help things like options, spreads, and value and stuff like that. But that's just showing you purely the system in action most recently. That was Friday's Rogue Trade, and it opens up. So that's the sort of thing we're used to seeing now, quite frankly. Okay, there's going to be a new closing trade procedure moving on to this point here that's being a little bit more precise for you. Okay, so what we said before is that whatever happens, as soon as the market opens, you close. Okay, so what we're going to say is this now. We're going to say, look, if the stock misses its earnings estimate, which is easy to see by looking at Yahoo Finance, and you can see by the reaction of the stock price. If you just go to Yahoo Finance and scroll down, you're going to see the news. as you see there, and that will tell you straight away, because you'll be watching the stock anyway, because you've got this trade on it. So you'll be it's easy to tune into that. It doesn't take very long on whatever one stock or two trades probably you've got open. And look what's happened after, but when it reported, that was either going to be when the market closes or before the market opens. You can look on there and see what you're going to be in for as soon as it opens. Now, most times it's going to be, as we expect, the stock beats the earnings estimate. But in the unlikely event that if the stock misses its earnings estimate, as it says here, just close it immediately as soon as the market opens, as initially was taught to you, okay? So what we're going to say now, though, is that if the stock beats the earnings estimate, which is what we're expecting to happen and usually happens, but the stock opens down, just wait until it gets to break even. What we're saying here is, look, this is unusual, because when a stock beats its earnings estimate, that there's something weird going on, and that stock should go up. So in the event that happens, though, there's probably a bit of selling pressure that's too high, maybe too many people trying to take profits from the next day, or taking profits too early. So what we're saying is, look, if the stock beats its earnings estimate but opens down, something is weird here. So just hang on a second, just wait until it breaks even and then get out. But it's an unusual scenario. But what we're trying to do is, look, all the time take out anything that's not helpful. So if it beats the earnings estimate but opens down, unusual scenario, but just wait till break even. If it misses the earnings estimate, just close it out immediately as you initially thought. So that's just giving a little bit more. Now, if it beats the earnings estimate but opens up, that's exactly what we're hoping to see, and same rule as always applies. Wait for wait for the prices to settle down. Sometimes you might get a weird spread or whatever, so just check that. Same with IG index. First thing, as soon as the market opens, you can get unusual spreads and so on. So just check that, just make sure. But if all goes according to plan, as it usually does, the stock beats the estimate, the stock opens up, sometimes dramatically so, and just close as expected. So the only unusual, so close immediately. In any cases, apart from this one, if it beats the earnings estimate but opens down, just let it get back to break even. That's an unusual one. All right, now I'm going to introduce a brand new and very simple, very quick to see additional filter. It doesn't create any more work because you're going to be on the Yahoo Finance page anyway. And it's to do with this quite a handy little chart here that Yahoo Finance shows you. And I'm going to show it to you now. But it basically, and this makes perfectly good sense when you think about it, if this company we're looking at has had earnings estimate misses on 3 out of the past 4, then that throws it out. And that makes sense if you think about it. We don't want to get into we're looking for stocks that are going to beat their earnings estimate. So we don't want to, get into a stock that has a track record of missing its estimate. So let me show you this example in Yahoo Finance, right? So we're going here. We're going to be in here anyway, because this is a great page to be on, because this is where we can see in real time towards the last 20 minutes, 10 minutes of trading, whatever, which is where we're really trying to make the decision. You can see right away, we're looking at here, has it got more than 3.5% that day? We can see that straight away. We don't want, that's one of the filters, if you call it, hasn't gone up more than 3.5%. We do want it to be up on the day, and that's all in the rules, as you recall. So we can see that it's up, but not more than 3.5%. We can also see the volume, and we can see the average volume. So we've got a very good at-a-glance dashboard here on Yahoo Finance. And that's just, but there's another one here I'm going to show you. It's over here on the right. See, we can just dodge across to here, and I can see straight away, does this stock have a history of beating or missing its earnings? So we look at this example. The orange circle says it's what they actually came in at with earnings, and the white circle is what they estimated. So as you can see, this was an example here where, look, we've got every second quarter 2016, the last 4 quarters, it says, look, beat it. But see, because it's above it, actual and estimate. So it beat it. So this one's got a great track record of, it's got a history of beating its earnings estimate, which is exactly what we're doing. We don't want that. The one way it goes wrong is where, if it happens, is where they miss. And you can even scroll over and it says, look, actual earnings, estimated earnings, they come in above it, which is exactly the sort of scenario. When it's drastically above it like that, that can really set the price on fire. So what we're saying then is that there's a new additional filter, very quick and very powerful. If it's got 3 or more earnings misses out of the past 4, then that rules it out. So this one would have been fine, but it's a very quick glance to see, and it's a very common sense thing to do. If one more filter, if it's got 3 or more earnings misses out of the past 4, that throws it out. So a lot of, I think, very nice enhancements there, and one more filter, so we can really get this cherry picking going a lot more powerfully there. And I will be, anything else that comes up, I will be letting you know. But this really doesn't create any extra work. It only enhances things. And I will speak to you next time.